All right, so but we're going to get to your pick. It's pretty interesting. Your pick has actually had 2 downgrades this week. It's not a name that gets a lot of downgrades. We're going to reveal it right now. It's our mystery chart. It's Amazon. Give us your thesis.
Listen, it's down 1 to 2% here in the last 6 months. It's only up about 4% over the last month. I think this gives it some room to really outperform in the final quarter. I think the Mag 7 really shows up. It's not going to be the greatest way to time it, but I think by the end of the quarter, you're going to see this higher. Now, if you look at the multiple, it's about half the number it was at about 28 than it was its peak in 2020, and its 5-year average about 42. Now, the one thing I'm also watching is forward EBITDA. It's 2 standard deviations below its 5-year average. So that's something really to kind of keep an eye on, because some people are talking about the margin compression, but I'm looking at it more as a relative value play.
You're looking at it as a relative value play. I want to get to some of these downgrades from earlier this week. I just want to get your take on it. One was from Wells Fargo, and this really hit the stock on Monday. According to Wells Fargo, Amazon's facing a lot of competition from Walmart's fulfillment business. In fact, according to them, Walmart's fulfillment costs are about 15% lower than Amazon's. We are going into the holiday season where a lot of retailers are going to try to have their goods in an online marketplace. Is that a concern for this stock going forward, that the fact they might lose some of that business?
I think there's always going to be competition that arises. Amazon was really a massive leader in the shipping and what they've been able to do for their product. But let's also not forget the AWS and the behemoth that sits in there. And they're really unlocking the true profit potential that's there. So I think it's much more than what we're looking at in the margins versus Walmart. But I think this is going to start to show up over the next year. We're really undervalued here from where it's been relative. All
right, I know you're focused on valuation. I want to go to something else. Very important when we're talking about Amazon. Their cloud business, they are a market leader, but according to Wolf Research's note yesterday, they believe that Amazon's going to come in below estimates. They believe that their AWS growth is going to be 19%. The consensus is 21%. The general consensus is also that Amazon's losing a little bit of market share, maybe just around the edges, to Azure because of OpenAI. Are you concerned about this, a deceleration of growth when it comes to AWS, or, even if it's slight, losing market share?
OpenAI is the #1 preference, and especially as enterprise AI really starts to unload here into businesses. Now, the real thing here to think about, I like to see the negativity. I think this really rides back into the profit potential and tightening margins that the other companies like Wells Fargo cited. I like to see this negativity. If the negativity is already out there, then it gives us an opportunity to see this maybe potentially beat, or a lot of it already priced in. And the way I trade and looking at it like that comes back to my commodity background and trading with leverage. I like to see things that either relatively undervalued, or the negativity is already built in, and that gives you an ability to see this thing being priced out.